Welcome back to Turning Hard Times into Good Times. I am your host, Jay Taylor, and I'm really happy to have with me once again David Stockman, former director of the Office of Management and Budget in the Reagan administration. And a couple of years back, David wrote a 700-plus page masterpiece titled The Great Deformation. And I would suggest that if you're serious about understanding the real reason why the rich are getting richer and the middle class in America is being destroyed, and if you are not satisfied with the Robin Hood policies of Bernie Sanders or Hillary Clinton, you would do very well to take a look at the Great Deformation, because God only knows the policies of the past certainly are not working, at least if you really care to take a look at the true facts, and that's why we have David Stockman with us today. But we want to talk to him today not about the Great Deformation, although there's an overlap for sure between that work and his latest. But what we want to talk to David about today is his new timely book, Trumped, A Nation on the Brink of Ruin and How to Bring It Back. Thank you for joining me again today, David.
Well, Jay, I'm very happy to continue the dialogue we started last time.
Yes, we've had you on a few times now, and it's just really always exciting and very thrilling to have you with us. You were a hero going way, way back, not afraid to tell presidents what they need to know, and you were a fairly young man when you did that, and they took you to the woodshed, but somehow they never broke you, and I'm glad they didn't, because you're here now to continue telling the truth, and we always need people like you to retain some sanity or some hope for the future, because unless we can really diagnose the real problems, I think there's little chance of ever seeing things get better. Well, in the first chapter of your new book, Trumped, you talk about how the bottom 90% of Americans have seen their living standards decline to an unprecedented degree over the past number of decades. Hillary Clinton and President Obama blame the current economic ills on the worst recession since the last depression. They say, after all, we inherited this beast, and now, look, we've made it much, much better. Well, that's, I think, debatable, and I think you probably don't agree with that. But Donald Trump, on the other hand, he blames unfair trade deals. In your work, you dig much deeper than either of those explanations of the politicians. You explain the problem in great depth. Can you provide an overview of the true reasons why the middle class is being destroyed and why a very small minority of our ruling elite are becoming extremely rich?
Yeah, I think what I'm talking about now is simply a continuation of where we were with the Great Deformation. That really focused on the crisis of 2008 and 2009, and then the insane money printing and massive bailouts of Wall Street and the auto industry, and then QE and everything that followed. None of this really addressed the fundamental problem of what I call bubble finance. It actually exacerbated and compounded the problem. So here we are today in 2016 with even more massive financial bubbles, even greater instability built into the system as a result of the actual lunacy, let's just call it that, of 94 months of keeping the money market rate, which is the key price in all of finance and all of capitalism, the overnight rate, that drives everything at the end of the day, at zero, which has done nothing for the Main Street economy and created endless free carry trade money, or gambling chips, as I call it, for the speculators on Wall Street. And so the reason I wrote this book now is to try to address, why did Trump happen? I mean, I don't think that he has laid out any articulate or cogent or systematic program to address this. But at least he is an outsider. He represents the voice of insurrection. He did properly say in the debate that we're suffering from 30 years of bad policy and bad experience that has led to war and debt and bubble finance and a rogue central bank and all of the other ills that we know about. And so what I attempt to do in the book is suggest that the chickens are coming home to roost. This policy of bubble finance has been so one-sided that it's created enormous prosperity for a tiny fraction of the population with this huge inflation of financial assets that we've had, and has hollowed out and seriously injured Main Street America, or what I call flyover America, as a result of these policies. And I give a couple of symptoms, and I think there are many more that we can talk about, but one you mentioned. If you use an honest measure of inflation, not the short stick that the BLS puts out and the Fed favors, but what we call the flyover CPI, which gives a proper weight to the basic cost of living that people face, energy and food, healthcare and shelter, and that then measures especially healthcare and the cost of housing properly. And you use that to deflate the median income that's calculated and published by the Census Bureau. You find that the median real income has declined by 17% since the year 2000. And that's, I think, a measure of where flyover America stands. We're not talking about 1 or 2%. We're not talking about a temporary setback. We're talking about the entirety of this century so far, in which the middle class in America, or the lower 90% for that matter, has experienced a larger shrinkage in real living standards than ever before in modern history, if not all of American history. So that's where I center this book, an indictment of the status quo, not in particular any testimonial in behalf of Trump, but it tries to explain why the public is rallying to his cause, his candidacy. And it's essentially a case where they've had enough, that they can see this is not helping jobs, this is not helping incomes, this is not helping living standards in most of America. Is creating what I call bicoastal prosperity to the people who either play in the financial system on Wall Street or are in the venture capital, Silicon Valley, social media business, or who live off the tentacles one way or another of this massive federal government warfare state and welfare state that has implanted itself in Washington in what I call the imperial city. So this book then tries to put in context where we stand today and suggest that we are on the brink of ruin. All hell is going to break loose momentarily. Trump was right when he said we're in a big, fat, ugly bubble, and as soon as they lift their foot off the neck of interest rates, we're going to have another big crash. I think he's absolutely right about that. I think we're at the end of this very tepid and barely measurable recovery. As he said, it's the weakest one in modern history. We're heading for another recession, and when we get into recession, we're going to find that this time the central bank has no tools, has no dry powder. They're already at zero for all practical purposes. They've already printed, $3.5 trillion, and if that fails, then I think printing more is more likely to scare the financial markets than rescue them. So we're on the brink of a fiscal situation that is about ready to explode. The false comfort that Obama keeps putting out about the deficit coming down. Well, of course, when you have even a partial recovery, there is some pickup in revenue, but it's back up again. We're going to exceed $600 billion this year, and the fiscal year is just closing, and we're heading back towards $1 trillion very soon, even before we get a full-fledged recession. And when you lay that on, we're back into the multi-trillion annual deficits. Now, you add a minimum of $15 trillion to the public debt, which will be $20 trillion when the next president is sworn in. You've got $35 trillion of debt on an economy that I show in the book is not likely to be much more than 24 trillion. And so this is 10 years out by the middle of the next decade. And so therefore, you are at 140, 150% debt to GDP ratio. You're in essentially the same condition that Italy and Greece and the rest of the failing socialist states of Southern Europe are at. So we have big problems hurtling down the track, and Hillary Clinton is basically saying everything is fixed and it's getting better and let's do more of the same. Trump is saying, I don't believe any of it, and I think that, at least he's right on that. The question remains, if he, by some miracle, is elected, what will happen then? And I think it's going to be a pretty wild and woolly journey.
I would just mention that on page 9 of your book, Donald Trump's candidacy, the good and the bad of it. Maybe talk about, I think you've probably hinted at some of the good of it. At least he's recognizing that things aren't all right. I mean, the first road to recovery is to realize that you have a problem and admit it and try to do something about it. So is that what you see as good about Donald Trump? What do you see that's good about him? And then what is bad about him? Because I would quote you on page 9, you said, our purpose at this point, however, is to dispel any illusion that Donald Trump, the man in his platform, offers any semblance of a remedy, end of quote.
Right. Well, yeah, I mean, what I'm saying, the good of it is that he's challenging the status quo. He's at least recognizing that you have a $20 trillion national debt, and we're damn near broke, and it's going to be very difficult to manage that going forward. He has at least pointed the finger at the Fed. He has said that Janet Yellen should be ashamed of herself. He has said that interest rates are artificially low and that we're not in an economic recovery. We're in a false stock market upturn. So he said all those things. But the problem is he hasn't thought through an alternative economic program. He's embraced a lot of things that really aren't going to solve anything. For instance, he said Hillary wants a $275 billion infrastructure program. Well, I'll go $500 billion. So I have a whole chapter in there saying, look, it is a myth that the infrastructure in America is falling apart, number one. Second, the only real federal role in all of this anyway is the interstate highway system, which is in pretty decent shape. Third, if you think it needs a little more money, raise a couple pennies on the gas tax and you'll get it all. Fourth, stop wasting money on state and local roads, which local taxpayers or users ought to cover, and certainly stop dissipating it on things like mass transit and highway beautification and bicycle paths and all the other diversions that they've taken out of the trust fund. People may not know this, but only 1/3 of the $45 billion collected annually in the highway tax goes to the interstate highway system per se. The rest of it is pork barrel. It is, what the politicians over the years, the deals they've made in order to roll the log forward, so to speak. Now, I just use that as one example. I think his point on trade is right and wrong. Yes, we have a huge trade deficit in goods, nearly $800 billion, current services and counting services $400 or $500 billion. But it's not due to bad trade deals per se. It's due to bad monetary policy. So I go into a detailed analysis, and I think one of these chapters is very timely on this very topic. And I said, look, when you have a Fed policy designed to cause a minimum of 2% inflation in an open world market where goods and services and capital can flow pretty much at will, what we have done over the last 20 years is offshored and exported a lot of our jobs because we have made American wages uncompetitive. And I show that the nominal wage, when Greenspan started all this, the average hourly wage in nominal terms was about $9 an hour. It's $23 today. But in real terms, it is lower actually than it was back then. So we've tripled the nominal wage in a world where we have to compete with the China price on goods and the India price on services as more and more back office service functions, so-called, are offshored as well. And therefore, we send the good jobs abroad. We then create enormous competitive pressure on wages from excess labor supply here, which holds down wages in the middle and lower end of the scale. Mm-hmm. And so the Fed gets its inflation, and the average worker and the below average worker ends up with a paycheck that is shrinking in real terms because of the stupidity of this whole 2% inflation policy. So I try to pin the tail on the donkey, and that's the Fed, in which I say, first, the whole inflation targeting and the 2% policy is misbegotten. There is no real economic logic or proof anywhere that you get better growth in sustainable terms with 2% inflation than you would with 1 or negative 2%. Secondly, it is, causing the huge loss, and I document this at length, of good jobs to the offshore because of wage inflation. And third, it ends up creating enormous bubbles in the financial system, which then, to compound matters, to add insult to injury, essentially turns the C-suites, the top management and boards of the major companies, into stock trading rooms, as I call it, because they're rewarded for essentially borrowing money or channeling all of their cash flow into stock buybacks and dividends, and not investing in the future of these businesses and in real competitive, productive, efficiency-producing assets. So you get, you can't imagine three impacts that are worse. You're killing savers. That doesn't even need to be, elaborated. Mm-hmm. You're killing jobs because of this whole offshoring process. You're killing living standards because the bottom half can't keep up even with the Fed's inflation. And you're killing investment by diverting, the management of American companies into, financial engineers trying to inflate their stock prices and their option package values. Now, you couldn't imagine anything more perverse than that, but that's the heart of what's wrong. That's why Flyover America is failing. That's why they're voting for Trump. The problem is I don't think Trump begins to appreciate where the evil lies. It's not because some goofball in the USTR, which is the U.S. Trade Representative's office, or the Commerce Department isn't being tough enough in some negotiation, although I don't think these trade agreements that we have now are worth much, and he's right that the TPP, for instance, ought to be forgotten about and rejected. But the agency that's causing the problem is not the USTR; it's the Federal Reserve in the Eccles Building. And,
all right, David, with just about 4 minutes left, I want to run this idea by you then with regard to the monetary system and the Federal Reserve. This is something that I'm hoping is a hopeful sign with respect to Trump. I understand that there's a Dr. Judy Shelton, economist, who is an advisor to Donald Trump, and she is a proponent of a return to some sort of a gold-backed monetary system. Are you familiar with her at all?
Oh, yes. I'm very familiar. I've read many of her pieces, I think a couple of her books. And I think that's a very encouraging sign. I don't know whether Trump listens to her or who he listens to, but at least I would rather have that voice in his inner council, or even Larry Kudlow and Stephen Moore and some of those 1980s supply-siders who have one idea, cutting taxes, which is okay, but there's a lot more that needs to be addressed, than the typical business Keynesian who've advised Republican presidents and top legislators for the last 20 or 30 years. So again, that's a bit of a hopeful sign. Now, I might say on that topic, I think I have a very interesting chapter in my book, and it's called Why the FOMC Should Be Abolished. Mm-hmm. And what they essentially do is go back to 1913, to Carter Glass, to the origination of the Federal Reserve, and point out that it was intended to be a banker's bank, did not have any macro function, did not have any mandate for inflation or unemployment or housing starts or retail or anything else. It did not have the right to own any government debt in any way, shape, or form, was not in the business of pegging interest rates, but instead was a standby source of liquidity that would discount real commercial bills and receivables that were short term for cash based on the market interest rate plus a premium. And so therefore, if too much gambling and speculation got into the market, interest rates would rise, and the Fed would only provide liquidity on good collateral and at very high interest rates, which would nip the whole speculative process in the bud. That's the
okay, David. We're going to have to let it go at that. We are out of time, unfortunately. The next show comes on after mine, and so we do have to let it go at that. But I want to thank you very much. Can people pick up your book at the bookstore, online, Amazon, I suppose?
Yes, it's on Amazon now. It can be pre-ordered. The printed copy is coming shortly. The ebook is available right now, and it'll be in the bookstores very soon.